Have you ever thought to yourself, if I could only go back in time? Well, my profiteers, going back in time is right now. Because what the market is doing something that we dream of having the opportunity of doing, we just don't know how to do. And what is that? Doing a sector rotation. Before we get started with all that great information, as always though, like, subscribe, share to our channel as we continue to grow on these YouTube streets. I'm just a person talking, but in real life, I'm a certified financial planner, been practicing for 17 years, a CFP for over 11 years, throwing in over $250 million in assets. I don't know what I'm doing. But today, we're going to talk about a sector rotation, what is a sector rotation, and how we can A, make money, and B, more importantly, not lose the bag doing this rotation. Let go.
NASDAQ posting its worst day since October of 2022. That wasn't that long ago, and it was a terrible period. Remember back then we hit some lows?
Yes, my profiteers. As I said yesterday in the video, the NASDAQ down 3.6% yesterday, the worst day since October 2022. And the S&P 500 down by 2%, the first time in over 360 trading days that it went down by 2%. Is that an opportunity? Who you telling?
Led largely by underwhelming reports from Alphabet and Tesla. Joining us now, Brent Thill. Very easy to say Brent Thrill would be very close. Does that ever happen to anyone, Brent? You're an analyst at Jefferies. I mean, I have a little...
I've been called worse.
Either one word. We got a few of these big names to go. Is it going to be...
All right, enough with the small talk. Let's get down to brass tacks. Let's get down to business. For everybody who have kids with those Disney songs.
Is it going to rhyme? Might not repeat itself, but do you think it's going to rhyme with big tech? Will it be disappointing, or have we had the shakeout already just from those two reports?
Yeah, good morning. We think we've had a lot of the shake. And look at even last night, ServiceNow, IBM, good software numbers. So I think we're seeing a rotation inside of tech. We're seeing a huge outperformance of semis and the internet. You've seen underperformance of software. And so our belief is software in the back half of the year will start to begin its move back up based on the underperformance and pretty good results.
So what does that mean, right? So tech is tech, but it's all types of subsectors in the tech sector. You have software, you have manufacturing in tech, you have business to business, you have sales, you have consumer staples inside of tech. It's so many subsectors that make up tech. Robotics, that's a part of tech. So the thought process is the Microsofts of the world, the Googles of the world, that's one part of tech, is overly overpriced. And what happens when you're overpriced? You come down. But a lot of the companies that are underpriced or have not grown as much as your NVIDIA, of your semi-microconductors, going from $200 to $1,200 a share in a year, going back down to $700, I think that might be a buying opportunity, right? NVIDIA going up so much than going down to $107 a share, I think that might be a buying opportunity. But if it's a sector rotation, how long will it take to grow? Short-term and long-term investors, let's look out.
So if you look at last night again, two bellwethers in software, good numbers, no signs of massive demand cracks. I think we have
Look at that. Now, yes, it's horrible being down 3.6%. And anybody who invested probably the last 3-4 months, they're like, where's all the growth of the NASDAQ at? I ain't see it. But man, look at that. The 1 year, 22.61%, still very good. And we take that from the bottom, October 2022, right? The last time it went down at 3.6%, the inflection point, Jiminy Christmas.
The overbought situation in a lot of the semi names. You've seen such a massive run. Many of those names are up between 40 and 100%. Internet was up about 10, software up about 2.
Think about that, right? So it looks at the NASDAQ 100. The top 100 companies in the NASDAQ, the big, large caps, they was running up like crazy. So that's why it could be the NASDAQ and the QQQ does not perform as good as the NASDAQ 1000 because the QQQ, the NASDAQ index as a whole, has all companies. So to his point, software companies, internet-based companies, not doing as good as the large mega caps of the world. And that's why my profiteers, the sector rotation, I think is an opportunity to trim some of the fat, right? Because we all got fat with NVIDIA. Trim some of that and do some systematic investing that will allow you to make money even if those large companies continue to go down in value.
So again, I think you're seeing a little bit of everyone out of the pool yesterday, timeout, reassessing where they want to go after their swim time. And we
look at the video, up 131% this year. Meta, 30%. People would love to have 30% over 3 years, which is 10% a year. Alphabet, Amazon, Microsoft, Apple, Tesla. Now, Tesla was almost even until yesterday, but it just goes to show. And if we look at what it was 2 years ago, heck, in 2022, Amazon was down by over 50%. Amazon, you look talk about that rally. Facebook was down by over 40%. So they have rallied. So it was just due time. But it does not mean, because I believe these stocks will probably continue to go down over the next few months, but it's a way for us to still be profitable. Painful profits, but still be profitable by doing a sector rotation, which we'll talk about here shortly.
We believe, again, there's going to be a mini rotation, nothing to take away from semis, and we think the fundamentals are alive there. But right now, I think ultimately, we've seen money come out across the group, and a lot of that money actually went into financials, industrials, other subsectors beyond tech. So that's what we saw yesterday. Again, a couple good reports last night. So our belief is a lot of the clearing event has been put in, and there may be a little more to go in terms of the rotation. But again, we think there's some attractive subsectors now, like software.
Is there a something you can point to definitively for what makes the Russell 2000 suddenly more attractive?
Whoa! Man, come on. Don't steal my thunder. I've been talking about the Russell for the past 2 weeks. Now, Tom Lee, he's been talking about it for the last 2 months. So, yeah, getting everything right. Ain't the quickest, right? Pause. But, man, I lost my train of thought. Just keep on talking, man. Keep on talking about what I think the sector rotation go into should be small caps, which we'll talk about here in a second.
To people, is it an interest rate cut? Is it the notion that maybe the AI craze has gotten, at least for the main players, has gotten a little bit ahead of itself, and you're looking for maybe beneficiaries that are further down the chain? I mean, what do you attribute it to, and how far will it go?
Well, just as I see it inside tech, and that's my seat, I think you've seen just an overcrowding in a handful of names: Amazon, Google, Microsoft, right? So there's a broadening event that's going to happen. That's number one. Number two is what you said on the rate cut. That should effectively help. Three is the increase in M&A. So we're seeing a material pickup in software M&A. You've seen a number of transactions from strategics and privates. Obviously, a lot of the smaller mid-cap names downstream, they're not buying the large ones because we can't get those through.
That is a great point, Jeffrey. Well, Brent from Jeffries. M&A. And with more M&A, which is mergers and acquisitions, more larger companies buying smaller companies or merging, that means that individuals believe that rates are going to be better, right? They make an agreement, they do it over a 3-5 year time period, do the initial lump sum, and then finance it over time, 6 months, a year later. They think we're going to have a better interest rate environment. And when interest rates are down, who profits the most? If it's not a recession, which I don't believe it's going to be one, who profits most with lower interest rates? My profiteers, small caps. So let's get to the charts. So yes, my profiteers, a sector rotation is when we go from one sector to another, right? So the old adage in investing is you want to sell high, buy low. where a time like this where large caps that did very, very well over the past really 18 months starting to lose some steam. Now, does that mean that they're bad investments for a long-term investor? 5, 10 years from now, I believe you can't go wrong with Microsoft. I believe you definitely can't go wrong with NVIDIA because they manufacture and sell chips. They're like a monopoly, and everybody uses chips. And as AI continues to grow, they're going to use NVIDIA. So that's not going anywhere. Google, YouTube, that's not going anywhere. Tesla, I think Tesla's here to stay. And I think Tesla, once they get into AI, that's going to go up as well. And Apple, I mean, Apple's Apple, right? So long-term wise, I think they'll be fine. I think there will be some bumps in the road going down, but I think over time, they'll go back up. But for a person that wants the edge, that wants to take advantage of the sector rotation, in my humble opinion, something to look at, not financial advice, of course, even though I'm a CFP, but you probably want to look at small caps. In small cap, IWM, the Russell 2000, for the risky investors, URTY, and let's look why. And we're going to go to the charts. And the charts, my profiteers, we're going to go daily. I usually like to do weekly, but I just want to show something daily. Look at this top right here. The top, the 16th of July, the S&P 500. Now, compared to the Dow is usually the most conservative of the indexes. Then the more aggressive is the Russell 2000. The S&P is like more conservative than the NASDAQ, but you get my drift. But as we can see, whoop, let's look here from top to where we are now, down by 4.5%. A correction is 10% or more. And look at these lines that I draw. Man, don't I do a good job drawing these lines? That's 10%. And you want to talk about a bounce. I don't think we're going to go down by another 5%. If we do, great buying opportunity, in my opinion, at 5,000. But as we can see, though, right, down by, down by 1%, down by almost 1%, down by almost 1%, up by 1, down by 16. Yesterday, 2.31 and 0.51. But we bounced up and we bounced back down. Not good at all. So downturn. And then we look at the NASDAQ. Oof, even worse. Where we at with the NASDAQ from top to bottom? 8.8%. Almost correction zone already, right? To get bounced to on our buy line, in my opinion, 12.48%. Another bad day, 2 bad days away. But as we can see here from the top, right? Look at that gap down. You got to feel the gap when it goes back up, though. But down 2.7, down 0.7, down 8, up 1, 1.6. Look at that, 3.64. And then again, down another almost 1%, even though it rose and it got rejected back down, right? Not good. So buyers, beware. Sellers, pretty happy right now, especially at the top. But look at my baby, right now at least, the Russell. And as we can see, June 16th, right, the top, it made 3.5%. It made 1.8. It did bounce up. Oh, what we call that right there? Resistance. And then again, lost. Resistance. But look at that bounce though. And then from the bounce from the bottom, which is our new floor, in my opinion, at 2178, 1.6%, 1.2, 2.13. Again, the NASDAQ was down by 3.64. S&P down even worse, not compared to the NASDAQ, but it was down by 2.3. So even though it's a more aggressive index, didn't go as bad. And today, yes, little rejection, but still up by 1.26% when the S&P was down and the NASDAQ down. Even the Dow Jones was up by 0.2. It did 5 times better than the Dow Jones. So from a sector rotation standpoint, if we want to get an edge in the market, if we want to be invested short term, when I say short term, I mean the next 2 to 3 months, because I think, come election time, October, that's probably when large caps will start large capping and growing again, right? And historically, we know August, September, historically bad months for the market. So a lot of profit taking going on. I think those profits are going into small cap, especially as Jerome Powell was going to cut rates.
It is an 85% chance, as we say today, that they're going to cut rates in September. 10% chance next week. If they cut rates next week, we're going to see this thing go up. I think up another 20% if that happens. So my profiteers, this is the opportunity to A, take advantage of the market, B, not lose money in the market. So definitely want to trim some of those large cap earnings we have, and C, feel good about ourselves. We make those profits, those painful profits, but those profits. So there you have it, my profiteers. I believe sector rotation is happening. We know what a sector rotation is. If we are invested in large caps like your Microsoft, your Nvidias, you're going to try to buy the dip, you might want to think twice about it. I'm not telling you to do it, not telling you don't, but it looks like it is a rotation. And because of all the growth that has happened in those Mag 7 stocks, might be some time to trim the fat. I'm not saying get out of it all completely. I'm not saying doom and gloom, but I'm saying it's good to be diversified. Pocket your gains. Those painful profits, but pocket your gains. And from a where should I park my money over the next few months, definitely should look at large cap. We have some rejection, but I think 1 or 2 good days of news, especially when it's a confirmation or a suspicion, as we buy the rumor, sell the news. Once the Fed does cut rates or make an indication that they're going to cut rates, we're going to see small cap continue to go up. So that's my thesis. Before we get out of here, though, always like, share, subscribe to our channel. Go check out our Patreon, man. We have a monthly newsletter, a lot of information like this. Also, financial planning information. I am a CFP. We give y'all some financial advice as well. And also, check me out, www.tonesfinancial.com. Anyways, love is love. Let's make some paper profits together, y'all. Peace.
Making no money mistakes, make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different. You